This is a video about a unique trading indicator known as Volumatic Support Resistance Levels by BigBeluga. It's a tool that helps you see beyond just where the price stops and starts, and instead helps you understand the why behind those moves. We're going to go over what this indicator is and how you can use it in your trading to hear what the market is really trying to say. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform that I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load any chart you like and click on Indicator, then type in Volumatic Support Resistance Levels. It's going to be this one by BigBeluga. Ladies and gentlemen, this is the all-powerful Volumatic Support Resistance Levels indicator. It's a really smart volume-powered tool designed to show you key support and resistance zones in a whole new light. Instead of just drawing lines at old highs and lows, it uses volume to show you where the real market conviction is, highlighting levels not just based on price structure, but on the real weight of market participation. So when you look at your chart, you'll see these colored zones. Green zones are your support levels and red zones are your resistance levels, which is pretty straightforward. But the really cool part is the histogram fill inside these zones. Think of this fill as an activity zone. The thicker and more intense the color gets, the more trading activity and volume was present at that level. This means you're not just seeing a line, you're seeing a visual confirmation of how strongly the market fought it out right there. And you'll also notice little circle markers that pop up. These are your high volume alerts, and they appear right on the price levels that pinpoint the exact moments when a huge burst of volume came in, making that level a critical pressure point. The indicator also colors the price bars themselves orange by default to show you the exact candles that were responsible for that volume. Next, let's explore the indicator's settings because there are some important adjustments we can make. If we go into the settings, you'll see the Inputs tab first. At the top, we have length, which I've left at 100. This is just the look-back period, telling the indicator how many bars to analyze when it's looking for those pivot points to build the support and resistance zones from. Below that, you'll find resistance max volume percent and support max volume percent. Now, the default for these is 80, but I've changed them both down to 50. The reason I did this is because a lower value here can help produce more trade signals. If the indicator seems to be producing very few trades for you, you might want to try lowering this number. Next is the bars max volume percent, which controls the threshold for coloring the price bars orange. And that last checkbox for inputs in status line is just a little extra that lets you see your settings displayed on the chart status line. Now, if we quickly brush over the Style tab, you'll see it's mostly for toggling things on or off to clean up your chart. You can turn the main resistance and support zones off entirely if you want. You can also hide the max volume circle markers for both support and resistance, and you can disable the orange bar color feature. It's all about what you prefer to see. For me, I'm not going to change anything here, so let's click OK. Now, for explaining how to actually trade using this indicator, the first strategy is going to focus on using those little circle markers, which also correlate with the orange candles as our main entry signals. But to make sure we have a better chance of success, we're going to add another indicator for trend and volume context. So you're going to go back to your Indicators tab, and this time you're going to type in Volumatic Variable Index Dynamic Average, which is also known as the VIDIA indicator. You want to select this one right here, also by BigBeluga. Now, we need to change a few settings on this new indicator. Let's set the VDI length to 100, and we can leave the VDI momentum at 20. Then in the Style tab, we're going to keep the first plot, but we want to disable the second plot option. And we also want to disable the lines. After that, click OK. So this new indicator is our trend indicator. It's made up of this huge trend cloud, and if it's green, that indicates a bullish trend. If it's red, it indicates a bearish trend. But the real beauty of this indicator is this little data pane it adds to a chart. It shows you the buy volume and the sell volume within the current trend, and most importantly, it shows you the delta volume. The delta volume is basically the percentage difference between the buy and sell volume, and we're going to use that to confirm the strength of our moves. For a bullish trend, we want to see a positive delta volume of at least 10%, and for a bearish trend, we'll want to see a negative delta volume of at least negative 10%. All right, so let's put it all together for a trade. For a bullish setup, the first condition is that the VDI indicator's trend cloud must be green. Next, you want to spot one of those orange candles printed by our first indicator, the Volumatic Support Resistance Levels. This orange candle signals that a volume spike has occurred. To make sure that spike is actually from bullish volume, you want to look at the most recent green support level from the volumatic indicator. You need to see those two little dots at the top and bottom of the fill, which confirms that a support level volume spike is what triggered that orange candle. The last condition is to check the delta volume on the VIDIA indicator. You want to make sure it's positive and at least 10%. Once all those conditions are met, you can take a long position. For your stop loss, you can just place it right under that huge orange candle that signaled your entry, because a candle that big suggests the price isn't likely to come back down anytime soon. Once that's set, you just let the trade run. And as you can see, ladies and gentlemen, this trade was profitable. Now for a short position, it's pretty similar. First, you need a bearish trend, which is indicated by a red trend cloud on the VDI indicator. Then you spot an orange candle. To know for sure if this orange color is due to bearish volume, you look at the most recent red resistance level on the volumatic indicator. You're looking for those two red circle markers at the top and bottom of it, which tells you that a resistance level spike triggered the candle coloring. But for our short trades, we can add a powerful extra confluence. We want to see that the orange entry candle not only appears, but that it also breaks and closes below the most recent support level. You can see right here, this orange candle closed below the support zone, giving us extra confirmation. The final check, of course, is the delta volume, which needs to be negative and at least negative 10%. With all that confirmed, you can enter your short position, place your stop loss just above the candle itself, and for the take profit, you can target 1.5 times your risk. If you let the trade run, you can see this one was also profitable. But we can even take this one step further and add one more filter to find some really high probability setups. We're going to add a third indicator, our very own custom indicator known as the Pinetrades Market Beacon. Now, instead of taking every single signal that comes along, we're going to use this as a final check. So let's say you have a bullish setup. All the conditions we just talked about are met. The VDI trend is green, you have an orange candle at a confirmed support spike, and your delta volume is over 10%. Before you take the trade, your extra confluence is going to come from making sure that most recent signal from the beacon was a long signal. The way you confirm that is you just look back from your orange candle and ask yourself, what's the very first signal I see from the beacon? Right here we can see it's a long signal. This basically indicates an increased momentum that will probably be sustained long enough for our trade to hit take profit. Once you see that, you can take your long position just like before and let it run. So to wrap things up, the Volumatic Support Resistance Levels indicator is a fantastic upgrade to traditional support and resistance analysis. It elevates your view by anchoring everything in volume, shifting the question from just where did the price stop to why did it stop there and with how much force. It gives you a much deeper insight into where the market's true conviction lies by showing you exactly how aggressively traders defended or rejected certain price levels. And just remember, this is not financial advice. The strategy ideas we talked about are just made up of indicators to show you how this tool works. You should always add your own price action analysis or fundamental research on top of any indicator. If you found value in this video, remember to leave a like, or even better, consider subscribing. Thanks for watching. See you next time.